Welcome back to Investing Talk Podcast. Today, we're diving into one of the big names in oilfield services, SLB, right ahead of their pretty crucial Q3 2025 earnings release. Yeah, so our goal here is to pull together what the analysts are saying, look at the latest news, the technical charts you've shared with us. We want to extract the really important bits, give you a clear picture of what to look out for and why this quarter is so significant, especially with their whole energy transition angle. And the risks, of course. Basically, we want you to be fully up to speed. And hey, after we get through this, if there's a company you'd like us to analyze next time, definitely drop us a suggestion in the comments below. And while you're there, please hit that subscribe button and maybe give us a like. It really helps us out. Okay, let's get into it. Looking at SLB right now, there's this real split, isn't there? This kind of duality. Internally, things look, pretty strong. Management's making changes, winning contracts. But externally, the market sentiment seems weak. The stock's struggling.
It's a fascinating situation because both things are happening at once. You mentioned the internal changes. The corporate identity shift is a big one. Just this month, October 7th, actually, they officially went from Schlumberger to SLB.
Right.
And look, this isn't just, slapping a new logo on things. It's a legal change, a structural one. They're streamlining internationally and really trying to signal that shift towards low-carbon services, digital tech.
Almost like they're trying to signal a fresh start, moving away from the old Schlumberger image.
Exactly. Breaking with the past, you could say. And operationally, it seems to be clicking, at least in some areas.
Yeah, because looking back over the last, say, 3 months, they landed that Advanced Digital Solutions Award from Petrobras. That says something about their tech.
Huge validation.
And they kicked off that North Sea carbon storage project.
Yeah.
That feels significant because it's not just talk, right? It's actual investment potential revenue in that new energy space.
That's the key point. It's execution. They're putting capital to work there. Plus, let's not forget the shareholders. They kept the dividend going, 0.285 per share quarterly?
Which works out to a pretty decent yield, around 3.4% annualized.
Right. So management's signaling confidence in cash flow even while they're investing in these new areas.
Okay, so that's the positive side of this story. The internal execution, the strategic moves. But then there's the other side. The market reaction. Why the disconnect? Why isn't the stock price reflecting these wins?
Well, that's the million-dollar question, isn't it? The stock definitely took a hit. In October, it was down about 3.8% for the month. And analysts, they noticed. Back in September, expectations started coming down.
Okay.
Which led to the Zacks consensus estimate for Q3 EPS getting trimmed, only by about 0.15%. But it was enough.
Enough to change the rating.
Yeah, it pushed SLB's Zacks rank down to #4. That's a sell rating.
Let's just pause on that Zacks rank.
Yeah.
For listeners who aren't familiar, what does a #4 sell really mean in practical terms? Is it a long-term signal?
Good question. It's really a short-term indicator purely based on those earnings estimate revisions. So #4 means analysts on average are lowering their profit forecasts right now. It suggests the momentum, at least based on analyst sentiment, is negative in the near term.
And that lines up with the technical weakness you mentioned?
Exactly. The risk models were already pointing towards potential downside, technically speaking. So the estimate cuts just sort of reinforce that negative near-term picture.
And yet, you've got major firms like Millias, JP Morgan, still pounding the table with buy ratings, right?
Yeah.
Some price targets even above $80. That seems like a massive contradiction.
It absolutely is. It highlights this clear split. You have the short-term focused traders maybe reacting to the technicals, the estimate cuts, fearing maybe margins have peaked. But then the long-term institutional folks, they seem to be looking past this quarter, betting on that strategic pivot, the rebranding, the digital push, the carbon capture stuff to eventually drive growth.
So it's a battle between short-term nerves and long-term strategy.
Precisely. Tactical weakness versus strategic confidence.
Which brings us right to the main event, the Q3 earnings. Expected around October 17th or 18th, this is where the rubber meets the road, isn't it?
Absolutely. This report will be the big reality check.
So what are the numbers we should be watching? What's the consensus expectation?
Okay, looking at the FactSet consensus, which tends to be pretty detailed, the market's expecting revenue around $9.02 billion.
And year over year, that would be?
That'd be up about 7.1%. Pretty healthy growth.
And on the bottom line, earnings per share.
The key number there, non-GAAP EPS, is $0.90. Hitting that would mean a jump of almost 10%, 9.8% year over year.
But we need to talk about the range of estimates that were floating around before this consensus solidified, because that tells the story too, right?
Oh, definitely. There was a pretty wide gap earlier on. Some preliminary numbers were way lower, down in the $0.67 to 68 cents range.
Wow, 60-something cents versus 90 cents? That's a huge amount of uncertainty.
It is. It perfectly captures the market anxiety. Those lower numbers suggest some analysts are really worried about costs, maybe inflation hitting margins, or maybe weaker North American activity. Whereas that $1.90 consensus, that number is banking on strong international growth and those higher margin digital services really kicking in. This earnings report basically proves which view was closer to reality.
Okay, and how has SLB done historically against these expectations? Do they tend to beat or miss?
They actually have a pretty decent track record recently. They've beaten the EPS consensus in 3 of the last 4 quarters.
Including the last 2, Q1 and Q2 this year.
Yes, Q1 25 and Q2 25, and also Q3 of last year. Q2 is interesting. They delivered $0.74, just ticking above the estimate, even though revenue actually fell year over year then. Showed some resilience.
And how does the stock usually react right after earnings?
Generally positive, actually. After Q2, the stock popped about 2.5%. The market seems to reward them when they execute. Though we should mention Q4 of last year was a big misreaction. The stock dropped almost 6% then, so it's not guaranteed.
Got it. Now, what about guidance from management itself? What metrics did they tell us to focus on for Q3?
Well, their official guidance was for mid to high single-digit year-over-year revenue growth. Hitting that $9.02 billion consensus would land them squarely in that range.
Okay.
But the real focus, I think, has to be on margins.
Right, because that's where the profit leverage is.
Exactly. Operating margin was 18.2% in Q2, up nicely year over year, about 80 basis points. And Q2 and Q3 are usually their strongest margin quarters because of project timing.
So expectations are high for margins this quarter.
They are. And the specific thing for you to dig into when the report comes out is that international revenue number, and crucially, the operating margin attached to it. That's the best window into how that offshore cycle is doing, how global spending trends are holding up, which is really SLB's key growth engine right now.
Okay, that covers the quarter itself. Let's broaden the view a bit. Thinking about the next few months, what other market factors or events should we be aware of? Things outside of SLB's direct control.
Yeah, there are a couple of dates to keep in mind. First up, pretty soon, is October 31st. There's a major ETF rebalancing event scheduled.
And why does that matter for SLB?
Well, these rebalancings force index funds and ETFs to buy or sell shares to match their index weightings. It can create temporary price pressure or support that has nothing to do with SLB's actual performance, just mechanical flows.
Okay, good to know.
What else? Later in November the 28th is the deadline for the big institutional investors to file their 13F forms.
So that's when we see if the hedge funds and pension funds were buying or selling during Q3.
Exactly. It's a lagging indicator, obviously, but it gives you a really clear picture of whether the smart money was keeping faith during that recent stock weakness, or if they started trimming positions. It reveals conviction.
And underlying all this, the macro picture still looks supportive for them. Oil prices, spending.
Generally, yes. The backdrop is pretty constructive. Global upstream spending is expected to grow maybe 5 to 8% this year, and importantly, that growth is weighted towards international and offshore projects.
Which plays right into SLB's strengths.
Right into their wheelhouse. And Brent crude prices were supportive during Q3, mostly trading between, say, $82 and $89. That keeps their customers funded and willing to invest in those new digital and decarbonization projects SLB is pushing.
Okay, good context. Now let's get into maybe some more speculative territory. What are the rumors or potential catalysts analysts are talking about? Things that aren't confirmed but could move the needle.
Well, given their strategy, one persistent theme is the potential for more acquisitions, probably smaller bolt-on deals focused on digital tech or maybe low-carbon solutions.
So ways to buy growth and accelerate that transition.
Exactly, rather than some massive, complex merger. Another one on the financial engineering side is talk about a potential share buyback announcement, especially if their free cash flow comes in stronger than expected. It's a classic move to support the stock when sentiment is weak, shows management thinks it's undervalued.
I guess. Any others?
Yeah, there's also some chatter about maybe a deeper partnership with a big tech company, a major cloud provider or AI firm, building on those recent digital contract wins.
To really scale up those advanced offerings.
Could be. Think AI for reservoir management, things like that. And finally, the market generally expects them to continue selling off non-core assets, maybe in certain basins.
Just cleaning up the portfolio, freeing up cash for the new strategy?
That's the idea. Focus the capital where the growth story is.
Okay, so lots of moving parts. Let's try to pull this together into some potential scenarios for the earnings release itself. You mentioned volatility is high.
Yeah, very high. The options market is pricing in quite a bit of uncertainty. Implied volatility is up in the 72nd percentile.
Okay, what does 72nd percentile mean in plain English? High drama expected.
Pretty much. It means traders are expecting a bigger than usual price swing compared to SLB's historical earnings reactions. The market is currently pricing in a move of roughly plus or minus 5% for the stock in the week after the earnings print.
So a 5% move, either way, is considered kind of the baseline expectation.
That's what the options market is implying, yes. Reflects that debate we talked about, the bulls versus the bears.
So let's map out those cases. What does the bull case look like?
The bull case is a strong beat on both revenue and EPS, driven by really robust international and offshore activity, maybe better than expected margins thanks to those digital services really ramping up, and crucially, strong upward guidance for the rest of the year or into next year. If that happens, maybe you see the stock jump 7 to 11%.
Okay. And the flip side, the bear case.
That's where those lower estimates come into play. The fear is that margins really do peak this quarter, maybe cost inflation bites harder than expected, or perhaps North American activity is softer, dragging things down. If they also issue cautious or downward guidance, then you could see the stock fall, maybe 6 to 10%. Multiples could compress.
And the most likely scenario, the base case. Probably somewhere in the middle.
Yeah, the base case is basically hitting consensus. Delivering that 90 cents EPS, maybe somewhere between 88 cents and 92 cents, driven by steady international performance, maybe offsetting some slight weakness elsewhere. In that scenario, you'd probably see a more modest stock move, maybe in the 4 to 6% range, likely positive, but not spectacular.
Okay, so summing it all up, the overall picture feels neutral to slightly positive, but with a big asterisk for caution.
I think that's fair. You've got the solid foundation, the international cycle, the contract wins, decent margin guidance. That's the bullish underpinning. But you have that technical weakness, that negative analyst sentiment hanging over the stock. It acts like a cap, limiting the immediate upside unless they really knock it out of the park with the earnings beat and guidance.
So it really comes down to execution versus expectation and how much clarity they give on that future strategy.
Absolutely. That interplay is key right now, which leads to, I think, the critical question for you to think about as you watch these results come out next week. If SLB does hit those targets, maybe even beats them slightly, will the market finally start to believe in the long-term story? Will the strength in international, in digital, finally outweigh this near-term technical gloom and sector sentiment?
Or is this the margin peak some bears are worried about?
Exactly. Or are we seeing the high point for profitability before costs really start to bite or growth slows? That's the tension this report needs to resolve.
Yeah, it is definitely the core question. A lot riding on this release. Well, that's our look at SLB ahead of earnings. Thanks for walking us through all that complexity. And thanks to all of you for tuning in to Investing Talk Podcast. We really appreciate it. We'll catch you next time for another analysis.